In this video, we are going to be analyzing C3.AI, ticker AI. And if you want your own stock analyzer, throw that in the comments. We'll get around to it when we can. Now, as you can see, we're up over 20% on the day. It's not the only stock that's flying. Really, a lot of the market is flying, especially more chip-related names. You have Nvidia up at highs. You have Broadcom up at highs. So, I mean, a lot of these stocks are absolutely flying. Now, what is the key focus on AI? And one thing to note before we actually go through the analysis is they do actually have earnings after hours tomorrow. So again, be cautious of this. This will really dictate the next move, but we can plan some levels getting ready for this release. So as you can see on the left, we have a 6-month chart. On the right, we have the 1-year chart. Now, what are key levels that we'd want to be focusing on? So you can see today we have already broken through the $37.40, and actually right below that as well we have the $36.60. Now what that is the second deviation on the 6-month and the third deviation on the 1 year. How did this act intraday? And what we will do is also put on the after hour data. So what you can see is obviously markets kind of pumped, kind of consolidated in this area, markets open, we pulled back, confirmed this level, and then we got that big push to the upside. So again, these levels have been retested, they have held, we are pushing higher. So that is one important thing to note, because that is usually quite a bullish sign. So what would be our upside target? So really we could then see a push coming up to around 43.30. This is really the high I see us going, at least pre-earnings. But if we did kind of come into a resistance earlier than that, we also have the $41.80. But my main focus for now would actually be that 43.30. That is our third deviation on the 6-month. Quite a likely target, but also an area where you become extremely overbought. So it's one of those things, we could look at trading at short bias, but at the same time, we do have earnings coming out tomorrow. So that's always going to be the big caution thing. If we hit this level today, we could look for an intraday short, or what we could do, and again, it's always going to be a bit of a gamble. If you're playing anything into earnings, it's always a gamble because you never know what the earnings is going to come out as. But one way I could be looking at it is shorting the shares, buying calls to hedge that risk. So even if earnings we pop 25%, again, we have a defined risk going into that trade. So that's one potential way I'll be looking at it, because what will happen is if it goes against us, again, we know we have a defined risk. Let's say we limit that loss at about $200 per 100 shares we short. So we can do that. But what it means is if earnings are quite poor and we smash to the downside, then really that's where some big opportunity can come. Because again, even if the call loses near enough all its value, the shorted share should outrun that. So that's one potential way I'll be looking to play this. And again, as recording this, I haven't taken a size or position. I'm not sure. I may do it or not. I'll probably look to do it tomorrow. Just depends how high we are tomorrow. If we're coming nearer to that 43 or above, I'll probably potentially look to trade that myself. And if we did break that high, we do have kind of one final resistance at 49. Now, again, this level, the only way we're hitting this level is if earnings are really good and we pop off that news. But then if that earnings is really good, we're extremely overbought from a technical standpoint. And considering you have that positive catalyst as well, above that level is going to be something I don't really trade, because again, I don't really have any levels coming into that level. There's also a catalyst, so I don't really want to be playing against that. And considering I'm a reversal trader, I think it's just too much risk trying to catch that reversal coming into those highs. So to me, if we kind of break above that 49, there is no levels I'm paying attention to. I'm just not paying attention to this stock. Now, on the other hand, if naturally we start to come down, or if the earning release sends us down, again, we do have those 37.40 and 36.50 supports. If we start to break that, we have the 31.50. Now, this level should be really strong because it's two levels on the exact same price. So we have the first deviation on the 6-month, second deviation on the 1 year, both on that 31.50. If we come down to here, this is going to be a strong support. Again, whether that's on earnings or just naturally coming down to that level, be paying attention to that level. And if we come even lower down, we have a support at 26.30. So again, this would kind of be that final support. If I'm holding this stock short, that's going to be my absolute final target. And the reason I say that is at $25.50 to $21. This is statistical mean. Statistical mean basically means fair value. So if we're looking at this from a trading perspective, really I don't want to be trading in that range, because to me that's a bit more of a gamble. Obviously, if you're trying to invest in this stock, that's another picture, and that could be a good entry if you're looking for investments. But from trading, really, I'm not looking to buy within that range. And then once we start coming into the long bias levels, we do have a long bias level from $19.80, but there's not much upside. So unless you're getting a day trade, the risk to reward is most likely not going to be there. So I'll kind of ignore that level, and we would kind of wait for a further push down, which would take us to $16 to around $14 as those key supports if we continue lower. Now, I say there's supports resistance, doesn't really matter. It depends on what kind of bias you are. Are you a short or long bias trader? Or are you a reversal or trend trader? Because as a trend trader, you're going to use these levels a bit differently to me. I'm a reversal trader. The first time we come into these levels, really looking to play that kind of pullback on these levels. If you're a trend trader, what you're watching for is kind of coming into these levels, breaking above it, coming back to test it as a support. And if it holds, like we saw today, if you come back, you kind of test this level, it holds as a support, you kind of break above that high again, then you can try and catch that trend to the upside. So the levels will be used by both reversal and trend traders, but again, you're going to use them in different ways. Thanks for watching. If you enjoyed this video, you will probably enjoy this video too.